Hey there, it's Mike Wise with CMG Home Loans and your weekly mortgage update. This week was all about jobs, and the jobs, it's JOLTS and ADP. Those were the big two reports that came out this week. Basically, very consistent message at this point in time. Hiring is slowing, layoffs are going up, and so now it's all about what is the Fed going to do at the September 18th meeting? Is it going to be 25 or 50 basis points? So before we get into that, I'm going to go over just a little bit of what the whole economy is kind of going into right now. It's a recalibration of where interest rates are going. Interest rates are down significantly from their highs of 8%. And even just if you look at the Fed funds rate, it's down pretty significantly as well. Inflation is getting under control. The jobs market is not getting any better. There's elections coming up. We've got Europe and geopolitical issues that are going on. There's lingering COVID issues that are still out there that we're trying to recover from. And then the holidays are coming up. So there's a lot of things that the market is recalibrating to at this point in time in the market. But the jobs numbers came out. JOLTS was it's the job openings and labor turnover. That's the how they get the JOLTS report. And the job openings fell 3% month over month. Basically, it was more than expected. It says job openings slumped to their lowest level in 3.5 years in July, and the available positions fell to 7.6 million versus the expected of 8 million. So the number of positions are going down. Number of people are losing their jobs. And so the ADP results, they came out, they missed the mark this morning as well. The economy added 142,000 jobs in August, which was expected to be around 160,000 jobs. So that was down. The unemployment rate actually came down to 4.2% from 4.3%. So that was good news. But we're always seeing this. The revisions are coming out again. So the prior 2 months, they've been revised down again. So it's a huge impact on the jobs market there. Having said that, the market, before I go into that, September 18th, there's still a 100% possibility of at least 1/4% cut. And then the 50 basis point cut, it went up to about 50% here. I've heard estimates anywhere from 35 to 55%. As far as it going to a 50 basis point rate cut. Then we've got the election. Right after the election, we've got another Fed meeting on the 7th, and there's 100% that they're going to reduce it again. We think that actually by the end of the year, the Fed funds rate could drop by 100 basis points. So it could be a big drop in the Fed funds rate through the end of the year. The mortgage market, they're already reacting to what's going on in the market, and we see Treasury prices actually, they're headed up. Higher prices mean lower rates, and so as the prices go up, you can see we've kind of seen this nice increase there. The yield on the 10-year Treasury is actually going down. It's hit a low level of 3.663, but it bounced off of that and is now back up here. It's actually back up above, as I'm recording this, above 3.73%. But it actually, we're staying in this band that's down here between 366 and 380. So I think we'll kind of settle in there until we see some more information come out that will suggest otherwise. Mortgage rates. They went down from 6.41% last week to 6.3%. Keep in mind that's for mortgages under $766,550 with 20% down. Super good credit scores on that. So again, you can see the monthly payments in there and kind of what that is on a $750,000 loan there. So rates are down. It's good news. And we'll continue to see them go down through the end of the year. The real estate market, still, this is just a quick update here. This is basically the increase in values for real estate over the last 20 years. I think it's since 1988. And so we've seen a significant increase here in the value of real estate. So value of real estate still continues to be a very, very good investment. And then Lastly, for comparison, wanted to go over, at 6.37, we saw some interest rates get down as low as 6.375, and they've kind of hunkered in right around 6.3 to 6.4, 6.5%. So that's a really good trend downward because we hit that high of 8%. And then lastly, I have a special. Ask me how you can get lower payments for 1 year. I have a special now that will lower your payments for 1 year. We'll give you a rate rebound refinance, which is a no lender fee refinance with $1,000 credit towards your title and escrow fees. And that gets you into your house now today while the values are still down, because when interest rates come down, you're going to start to see more competitive market on the housing market and probably see some higher values on those properties. So this is Mike Wise. Hope you have a great weekend. I will be around this weekend to answer any calls or texts, so please feel free to reach out to me. Hope you have a good one, and we'll see you next week.